Hello, my name is John Lord, and welcome to our lecture for Chapter 1 for our auditing class. You have seen me talk about some of my background in the introduction video, but I'm going to go ahead and repeat some of that here, since some of you may have not had a chance to see that yet. I have been a CPA in the state of California for about 30 years now. CPA is a certified public accountant. I'm licensed by the state of California to audit financial statements for public entities and private entities that need audit report. So I went to Cal State, what was then Hayward, Cal State East Bay, which is located in Hayward, which is where I still live. I'm talking to my phone from my home in Hayward. And when I graduated, as I was getting ready to graduate, I passed all 4 parts of the CPA exam, and then went to work for a federal government agency called the Government Accountability Office. GAO is the auditing investigative arm of Congress, and I got the experience from my license by being on a variety of financial statement audits, including audits of the Internal Revenue Service, the public debt, the consolidated financial statements of the federal government, etc. I'll bring up some of those experiences from time to time as they're relevant to the materials we go through and talk about financial statement auditing. The objective of this course really focuses more on financial statement auditing. There are other types of audits like program audits that you can do, which I was involved in some of those when I was with the GAO, but for the most part, I did financial statement audit, and that will be the primary, almost sole singular focus of this class. Okay, so I spent about 26 years, as I said, get the experience for my license, and about 1995, I also started teaching. I've been teaching the CPA exam with Becker Professional Education. Becker is the largest CPA prep course in the world, and I started that around 1995, and I still am involved in teaching CPA material to this day. So I've been doing that for nearly 30 years, helping folks prepare for and pass the CPA exam. CPA exam is a 4-part exam, and I'm going to talk more about it here in a couple of minutes, but the auditing section of the exam is very, very relevant to this class. So if you're thinking about CPA at some point in time, the material that we cover in this class will help you with an entire section of the CPA exam. There's also a financial accounting and reporting section, a regulation section, and currently a business environment and concepts section, although starting in 2024, that part of the exam is going to be eliminated, and they're going to have a discipline section of the exam, which can focus either where the candidate can choose to either focus on financial reporting, tax issues, or computer control issues, data analytics, that sort of thing would be that 4th part. You can choose one of those 3 as your discipline area that you choose, and you would make up your decision of that. That will begin in 2024, next year. Now, in addition to teaching CPA, I started teaching at Golden Gate University in 2000, and I've been there off and on over the last several years. Since about 2017, though, I have become the director of their CPA Applied program, and that CPA Applied program, we have 4 classes there at Golden Gate, and those 4 classes align with the 4 parts of the CPA exam. And I'll talk more about that CPA Applied program here towards the end of the discussion as I talk about how to get certified. In 2014, I decided to retire from the federal government and pursue teaching full-time. So around that time, I started teaching at San Francisco State, then a community college, some community college schools, and then I started teaching at San Jose State, and then UC Berkeley, and then Stanford, and now De Anza college. And so I've been teaching at these different schools. I retired from state university system in September of 2022, last year. And so I'm still teaching at obviously Golden Gate, De Anza, and I still teach at Stanford. My Stanford class is for non-accounting majors, and I teach in the Management Science and Engineering and School of Medicine. They're accounting, but for non-accounting majors. So that is pretty much what I've been up to over the last several years. Oh, I also teach continuing professional education courses after an individual receives their license, their CPA. The state of California and also the federal government is applicable in some instances, requires somebody to maintain 80 continuing professional education units to keep the license current every 2 years. And if you're involved in government audits, 24 of those hours need to be government related. So I worked with Becker to develop a set of governmental classes where I helped develop those courses, and then I teach those courses online. So at some point in time, if you need government CPE, you may see a talking head, me, on a video there. Okay, so that's just a little bit about my background. And forgive me, I seem to always have to forget to get my clicker out, okay? Because as we go through the slides, I'd like to advance them using my clicker, because I pretty much have myself in tablet mode here, okay? All right, good. So let's go ahead. You can see the textbook, and in another discussion, I talked to you about how to acquire the textbook and stuff. So you know, you can see what my comments are there. However you acquire the textbook, make sure you get Connect access. That is the only way that you're going to be able to access the material that I have put into the Connect system that is run by McGraw-Hill. You have to get that McGraw-Hill Connect. And I know some folks like to go to the bookstore. Some like to order it directly through McGraw-Hill, like I talked about in the intro. That's your decision, but make sure that you do get that McGraw-Hill Connect code that'll allow you to click on the URL that I'm providing for this class. That's how you go ahead and access the class. You click on that URL that I've provided you. That will then ask you, they do give you a 2-week trial period, which you probably want to take advantage of. Take advantage of that 2-week trial period. And then once that expires, go ahead and give them your credit card information. Then they'll give you the McGraw-Hill Connect code, or I'm assuming you could acquire that through the bookstore. Regardless, they're going to hit you up with that code after you click on that URL. You need to put that code in to be able to access the material that I put into Connect for you. Okay. Okay, good. So let's take a look at chapter 1, and we have pretty much a fairly short discussion, and I'll do my best to get the recordings of the lectures up a little earlier in the week. About the middle of the week is the latest. I'll push that out as I need the time to gather my thoughts and sit down and record these for you. So hopefully you'll find them helpful. My belief to be successful in this course, watch the lectures. In the lectures, not tonight because we're at such a high level here, but starting pretty much at chapter 2, I'll have embedded in there example questions that will be very, very, very similar to our midterm questions. So I think the best way to study for this class is get the slides, follow the lecture, see how I'm presenting the material, and then getting into that McGraw-Hill Connect, doing some more practice with that material in McGraw-Hill Connect. And by the time you get to our exams that I talked about last time in the syllabus, then you will be in good shape to start to take a look at, you know, do a good job, I should say, on those exams. And you've seen the dates of the exams on the syllabus, and I've talked about that previously. Okay, all right, good. So let's go ahead and see if my clicker's gonna, no, my clicker's gonna go ahead and do its thing and not cooperate. Okay, there it goes. Okay, good. All right, so what happened? Let's start out talking about responsibility here, okay? Because I think it's important that we understand the difference between the responsibility of the owners of the business versus the responsibility of the auditor, Okay, so what happens? The independent auditor is there to look at financial reports, balance sheet, income statement, statement of stockholders' equity, statement of cash flows, the notes there too, right? What we call the basic financial statements. It is responsibility of the company management, and they may be directed by the owners of the company to do that. Okay, maybe the independent owner has some management that they put in place, or the stockholders elect the senior management of the entity if they have voting rights on that stock, right? Okay, but the managers of the entity are responsible for putting together the financial statements that I just rattled off. And then it is the auditor's responsibility to look at that material and determine whether or not that material was prepared in accordance with the generally accepted accounting principles, GAAP. Say FASB, right? You've studied intermediate accounting. You've seen, all the things that FASB wants a company to put into the financial statements. Well, that's directed to the preparers. That's directed to management. The auditors come behind, and the auditors follow a set of standards. And if we are and we'll talk a little bit more about this in chapter 2, but if we are a public company, we would have to follow standards promulgated by the Public Company Accounting Oversight Board. If we're auditing a non-public company, okay, if we're auditing a public company, we follow standards promulgated by PCAOB, the Public Company Accounting Oversight Board. If we're auditing a private entity, a non-public entity, let's just call them that, non-public entity, then we follow the standards promulgated by the American Institute of Certified Public Accountants Auditing Standards Board. We'll talk more about that. We're going to see that there's significant overlap between those two sets of standards, but it's the auditor's responsibility to follow those standards. And in that process, what we're doing is we're obtaining an understanding of the entity, its environment, its internal control, and we're using that understanding to determine the timing, extent, and nature of further audit procedures. We will then gather evidence, and we gather evidence in support of an opinion, and it's a reasonable assurance opinion. We're going to talk a little bit about the types of opinions here tonight, but it's a reasonable assurance opinion that the financial statements are prepared in accordance with generally accepted accounting principles. So the entity's management is responsible for preparing the statements. The auditor's responsibility is to issue a reasonable assurance opinion that the financial statements are prepared in accordance with the general accepted accounting principles. Investors and creditors can look at that audit report, and now they know that they can rely on what's contained in those financial statements for making their investment and credit decisions. Of course, as accountants, we like to think, that, everybody makes their decision just based on the financial statements. There's a lot of other information that investors and creditors might look at that go beyond the financial statements. But at least for that part, they have the assurance of the independent auditor. You have to be independent from the entity to issue that positive assurance opinion. Okay, good. So you can see some of the things that management is responsible for: internal controls, accumulating transactions, preparing the statements, and issuing the statements. The auditor is responsible for doing what? As I said, they don't mention it here, but basically looking at the internal controls, obtaining evidence that will support the information in the financial statements. Management asserts certain things in those financial statements. For example, if management shows a building, they are asserting to you that they have what? They have reported that building, that the building exists, that the building is valued correctly, that they have all the rights associated with that building, etc. And it would be the auditor's responsibility to gather evidence in support of those assertions. So as we move further along, I'm going to be talking to you more about financial statement assertions, but there are a set of assertions that the auditors design procedures around to help them obtain evidence in support of those assertions. Okay. Once we have gathered that evidence, we determine whether or not we believe the financial statements are fairly stated. And then we provide an opinion, a report that gives reasonable. You never give absolute assurance. As auditors, we cannot give absolute assurance. You give an opinion that gives reasonable assurance. It's not absolute. Nobody can give you absolute assurance about anything. Okay, and you say, well, wait a minute. My mother told me she loves me. Well, if your mother tells you she loves you as an auditor, ask for some evidence. Okay, there is no such thing as absolute assurance in the auditing world. It is reasonable assurance, because there's always a chance that maybe we pulled a sample of transactions and let's say our sample was not representative of the universe. It happens, of the population. So we make a wrong conclusion based on the sample. Well, that's why we only give reasonable assurance. Or maybe there's some sort of fraudulent activity going on. And we'll talk more about what the expectations are around fraud in financial statements. Maybe there's fraudulent activity going on, and the concealment aspects of fraud make it impossible for the auditor to detect a misstatement caused by fraud. Thus, auditors only give reasonable assurance. Okay. Okay, good. Now, when we look, we say that we have evidence, and when we look at that evidence, we relate that evidence to the assertion. Okay. And evidence is relevant if it relates to the assertion. So let's say we're looking at the existence assertion. You put an asset down on the books. Does it exist? So what do? It says building, $10 million. What do? We first go and see, is there a building? Right? Companies have done this. They'll put down that there's some property somewhere. Meanwhile, a building somewhere. Meanwhile, the auditors go and look to see that building. There's an empty lot there. Okay. So what happens? We'll have to get some evidence that it exists. They say that they paid $10 million for that. Of course, under the historical cost principle, they carry that at historical cost. So we would have to do what? We'd have to get some evidence to support that they indeed did acquire that building for $10 million. But then we'll have to start to look at the valuation of that. That's an accounting estimate because they should be depreciating that building. So we'll have to look and do some testing to make sure that we believe that they have valued it correctly, they've taken the correct depreciation, etc. And we'll talk more about some of these stuff as we move through these various chapters as in specific audit procedures related to that. But all of that testing that we'd be doing, looking for the building, etc., would be relevant to the assertion. But then there's reliability. Is the evidence reliable? Okay, now auditor direct personal knowledge is the most reliable. If you tell me that you have this asset over here, I don't know if you can see this on my camera, but if you tell me you have this asset, the most reliable evidence is that I go and I see that asset. That's direct personal knowledge. But some things don't lend themselves to direct personal knowledge where you can go and look at the thing. What if it's money in the bank? Well, now you would look for external evidence from the bank confirming that they hold a certain amount of the bank. And we talk about auditing cash. We'll get into that a little bit more. Okay. If the information is available externally, it is more reliable if it comes straight to us from the bank than information that the client already held. So you're auditing sales and the client can show you that they have some invoices documenting those sales. Well, it's better than oral evidence, but it's internal evidence. It's documented internal evidence. So it's not as reliable as external documentary evidence. Oral evidence is the least reliable, although if you combine it with some of the other things, direct personal knowledge, external evidence, internal evidence, oral evidence is internal too, but documentary oral evidence, if you combine oral evidence with some of those others, then it becomes more reliable. So we'll talk more about the hierarchy of evidence. I'm just giving you a sense here as we look for the relevance. How well does it relate to the assertion? If we're talking about existence, the best evidence is going and seeing it. Okay. Most reliable is direct personal knowledge, but if it's something that we can't go and see, we're not going to be able to go to the bank and say, show me my client's money. No. So they're going to have to do what? They're going to have to give me a confirmation that they'll send directly to me. It's a document. I'm not looking at the item itself, but I'm looking at a document from the bank, external evidence that confirms. So it'd be reliable. And of course, it's relevant to the existence because they said they had $10,000 in the bank, and I'm going and getting some support of that existence assertion. Okay. And we'll talk more about the assertions as we move along, because a lot of what we do, I think you're probably sensing, centers around the assertions. Okay. Now, phases, and we will start out after we get through chapter 2, where we're talking about standards. Then we'll start getting into some of these steps. Accepting the client. Okay, you have to be careful. A client that lacks integrity could affect your license, could affect your CPA firm. So you want to be careful there. Okay, some preliminary activities. For example, we'll be having these planning the timing of certain audit procedures, that sort of thing. We will develop an audit plan. As I've already stated, we will consider internal control. I'm going to go ahead and underline that one. Not, it's like my pen doesn't want to work. There it goes. Okay, I'm going to go ahead and underline that one because that's the big one. And we're going to spend quite a bit of time looking at that. Okay, then we will go ahead and perform certain audit procedures. And when we look at the procedures in this class, we'll look at them by account. So if you look at the syllabus, you'll see revenues on there. You'll see that we have some things that we talk about around, expenditures, etc. Okay, inventory. You see the different accounts, and we go through account by account to do this. Now, what's important, even though you're looking at, say, revenue, okay, you'll still be thinking about the assertions around revenue. So if they say they had revenue, did it actually occur? And you're going to do procedures around the occurrence assertion. If we're talking about assets, fixed assets, let's say, does the fixed asset exist? So you do your procedures and you line the procedures up with the assertions. Completing the audit, I think it's like around chapter 17, towards the end of the class, we get into that discussion. In completing the audit, you're going to be talking, for example, to the client's external attorney. There needs to be direct communication between the external attorney and the auditor to see if there are any litigation claim and assessments, very much administrative type steps as you complete that audit, and then you evaluate the results and you ultimately issue that audit report. And when you issue that audit report, it could be unqualified, it could be qualified, it could be adverse, it could be disclaimer of opinion. Okay, now what I am providing you here is a graphic, okay, that sort of illustrates to you how these different types of opinions work. Okay, so if we have, and we'll get into this in chapter 18, okay, but towards the end, this is like the last chapter that we'll really talk about in this class where we dig into this more. But if we have an unqualified is the term that's used for public companies. Non-public companies use unmodified, okay? But the emotion of the auditor is exactly the same. The auditor is happy if we give an unqualified opinion, okay? Now, if we have to qualify our opinion, we can either have to qualify our opinion because there is something that wasn't properly followed using GAAP, okay? So we're kind of on the GAAP side of things. Then on this side of the panel where I just wrote GAAP, okay, if we have a qualified opinion, the auditor is sad. If we have some sort of gas problem, okay, everyone wants to laugh when I say gas problem, that's generally accepted auditing standards. And if there was some audit procedure that the auditing standards said that we should have done that we aren't able to do, that becomes a gas issue, an audit issue. And again, the auditor qualifies. The auditor says, I wasn't able to complete all the procedures I want to, and I can't tell you if there's some kind of mistake here that should have been fixed. Under the qualified side, on the GAAP side, the auditor is saying, I know there was a problem and here it is. Okay, but the auditor is not happy in either sense. And as our problems go from bad to worse here on the GAAP side, the auditor goes from sad to crying. And with adverse, the auditor is saying these financial statements cannot be relied upon. The nature of the problems are so material and so pervasive that the financial statements cannot be relied upon and they should not be relied upon. So the auditor is literally crying. With a disclaimer of opinion, the auditor, and I'm going to leave the mouth out of this auditor's face because the auditor is saying, I don't know. Those are shoulders shrugging. I don't know. I can't tell you if the financial statements are fairly stated because there were so many audit procedures I was not able to apply that I have to disclaim an opinion. Okay. Now, if you're sitting there saying, John, you're going awfully fast with this, and I'm not necessarily picking all this up, don't worry. This is what the auditor does at this, the nature of these reports are what happens at the end of the audit. We're going to talk about that at the end of the class in chapter 18, but I'm just giving you a sense as to the nature, the types of reports, the nature of the conclusions that are included in that report as the auditor goes through that last step there and issues that report. Okay. All right, good. That's all we have for our material related to chapter 1 tonight. Okay, so pretty quick lecture. So what I want to do is go ahead and close this and talk to you a little bit about the CPA exam. Okay, so what happens? CPA exam, in order to sit for the CPA exam, and guys, you are approved to sit for the CPA exam by a state agency. CPAs are issued by the state, and the California Board of Accountancy is the entity that would issue your license. So they're the ones that administer the exam, and in each state, the state does that. Now, the exam is a worldwide exam, okay, but is administered by the states. So the exam that you would take in California is the same exam that would be being taken in Florida, would be taken in New York, would be taken in Rhode Island, whatever state, the exam is the same across the states, okay? Some folks will take the exam in, say, Abu Dhabi, okay, which is in the United Arab Emirates. They would have to register for the exam through one of the states, and they usually pick the states that are easiest to register for, and California is not one of them, by the way. They would go ahead and register for the exam, but they would literally, their body would be in Abu Dhabi when they take that exam. And I had the chance to go to the Middle East and go to Asia a few years back to talk about taking the US CPA exam in those various foreign locations. Often folks want to get their US CPA, even though they're living and working in a foreign country, because maybe a foreign company wants to list on the US stock exchange, and the Security Exchange Commission, which has the authority over the issuance of public company stocks, will say, well, we want to see that your staff has sufficient US GAAP knowledge in order for us to allow you to issue your financial statements in the US. And one way to demonstrate that is, well, we have staff that have passed the US CPA exam. So they take the US CPA exam. Somebody in Abu Dhabi would have to register through one of the states, probably not California, one of the easier states to register. Once they register through the state, when they actually take the exam, they would take that in Abu Dhabi. Somebody in New York could register to take the exam through California because they know ultimately they're going to move to California. So they'll register to take the exam through California, but they will literally sit in New York when they take the exam, or vice versa. You are sitting in California when you take the exam, even though you registered through New York. Okay, so I'm going through California's requirements. We're here in California. I'm going through California's requirements. Okay, so to qualify for the CPA exam, okay, there are different options. Option A, complete your bachelor's. You complete your bachelor's degree, and complete your bachelor's degree, and the bachelor's degree has to carry with it 120. I want to write that, you can see it. 120 semester units. Okay, now for quarter schools, what you do is you take the to turn quarter units, to turn semester units into quarter, you take the 120 and you multiply that by 1.5. So it's 180 quarter units. Or if you're trying to turn your quarter units into semester, you take your quarter units and multiply them by 2/3. Okay, so it's 120 semester, 180 quarter units, okay, that you need to have been included in completing your bachelor's. And of those 120, 24, or 36 quarter have to be accounting, and 24 semester, 36 quarter have to be business related classes. And I'll show you the nature of classes that would qualify to be accounting would be business classes here when we get into a more detailed sheet in a minute. So once you complete that, then you are eligible to sit for the CPA exam, and then you can go ahead and take that 4-part exam. Okay, and you can see the nature, I guess I can show you right here, the nature of the accounting subjects and the nature of the business subjects. Sometimes students are surprised to learn that, you know, mathematics is something that you can use as a business class. Okay, accounting, any classes that come from the accounting department that have accounting in the title, like accounting 111, 211, accounting 58, whatever it is, if it says accounting in the title, then it counts as an accounting class. Okay, and sometimes students see this list and say, I mean, I have to have one of each of these. No, you could take introductory to accounting, you know, 1A type class, right? You could take that, let's say it was a 3-unit semester class. You could take that 8 times and have the 24 units. Now, you can't take it at the same institution anytime, but if you went and took that class at 8 different colleges, 3 units, I don't recommend you do that, you would accumulate the 24 accounting units. And again, you can see the nature of classes that constitute business classes, including, you know, economics, for example, finance, marketing, all would count as business related subjects. Okay, so you complete the bachelor's, 24 accounting, 24 semester. And you can get these units at community college. Okay, now generally you can't get the bachelor's from the community college, so you're going to have to transfer to a 4-year university that's able to award a bachelor's degree to obviously get the bachelor's degree. Okay, and I'll talk more about some strategies around that here in a couple of seconds. Okay, so that's what it takes to you know, sit for the CPA exam, those 4 parts that I mentioned. You have to get 75 or better on all 4 parts in order to be able to successfully pass that exam. 75 on the financial, 75 on the audit, 75 on the regulation, and 75 at least till December 2023 on December 2023 on the BDC. That's going to go away starting in 2024. Okay. All right, good. Now you come over and I can go ahead and get rid of this one. And I want to show you, it always does this to me. It always hides my Excel sheet. I know I have it opened. There it is. Okay. And you can see here, again, we're talking about the bachelor's degree, okay, the 24 accounting, the 24 semester. Okay, but I want to look at this with you because a lot of times you hear discussion about this 150 units that you see up here, and you say, well, John, why are you saying 120 semester units when I've always heard 150? Well, after you have gone through and you've got the 120 and you're eligible to sit for the exam, there's an expectation that you will have 30 more units, and this thing gives me a hard time when I try to circle, but okay, it's highlighted in a funny way there. You can see that you have to get 30 more units for licensure. So when we get down to this lower part, again, this comes from the State Board of Accountancy, California State Board of Accountancy, they're saying in order to get the license, and I wrote in, you need 30 more units, just thus bringing you up to the 150. So you have your bachelor's, you have 120 semester units, you get your bachelor's, but now you want the license, you'll need 30 more units. Now, a lot of times as students are completing their bachelor's, they'll just go ahead and add additional classes to that, or maybe you studied something other than accounting before you found your true love accounting. Like I was a broadcast major before I discovered accounting, so I could have used those additional 30 units or the additional units studying broadcasting to bring me up to the 150. Okay, but you need the 120 units, and then you need 30 more units. Now, what they tell us about those 30 more units, they tell us that 20 of them have to be related to accounting. Now, when they say they have to be related to accounting, notice, guys, that they're not quite as specific as you might think. I mean, we're accountants, we're all about thinking that accounting is accounting, but notice they tell us that, hey, those additional accounting units, only 6 have to be actual accounting classes. 14 of those units can be business, and up to 9 of those units can be in areas that are really kind of far from accounting. For example, English classes, okay, foreign language classes, cultural studies, that sort of thing, okay? But you can't go past 3 in any one of the categories, and you can't go past 9, okay? But let's think about the accounting and the business here for a second. So what happens? You have 24 accounting, 24 business. You need that to sit for the exam. But now they tell me I need 20 more accounting units in order to get my license. Well, since it's saying only 6 of those have to be true accounting, then if you look at the big picture for licensure, it's what? 30 accounting units you ultimately need for licensure. The 24 that you use to sit for the exam, and then the 6 more that you have to acquire in order to get your license. If you look at the big picture, the business umbrella, 24 units of business, and then 14 to be able to sit for the exam, and 14 for the license, that's 38 units. So you really need what? 30 accounting and 38 business units to ultimately get your license. Now, what happens? They tell you that if you complete a master's program, okay, Master of Science in Accounting or whatever, then they tell you, we'll waive the 20 units, okay, now for your license. The reason they're doing that, let's say somebody studied music, and then they said, boy, you know, I'm not as talented a musician as I thought I was, so I guess I better go and, you know, study accounting, whatever, right, for my career. So what happens? Well, what happens there is they'll let you, so I'm going to get a master's in accounting. You already have a bachelor's in music, I'm going to get a master's in accounting. They let you count all of the accounting classes you take in your master's up in the 24, the requirements to sit for the exam, and you don't have to worry about then going and getting additional accounting units for the license. They'll say, hey, you're good on the 20, and then you have to get 10 ethics units, and everybody has to have this class that I've highlighted in green here that I just put a yellow mark next to. Everybody has to have that 3-unit ethics class, and most of the schools now have an ethics class that you are able to take that would satisfy that requirement. The remaining 7 units can be made up of classes that have these various words in there, okay? So if you look at this worksheet that I have here, okay, what I have done, and let's see, is it going to let me edit it without giving me a hard time? I hope so. And I'm going to put my machine in tablet mode. If my camera shuts off, forgive me, because that does happen sometimes. But instead, what decided to happen was it decided to close the worksheet on me when I put it in tablet mode. Looks like my camera is still working. Okay, that's all right. Let's go ahead. Let's look at that. And I have this worksheet, okay? And if you look at this worksheet, okay, what I have done here is I've used a color coding here. The purple is the exam requirements, the blue, whatever, is the licensure requirements. And so as you're going through and seeing, I'm taking accounting 1A, so I took that at the community college at De Anza. I'll put a 3 in there, and that means I have 21 units left to go. You put a 3 over here. Now I have 18 units left to go. Now I'm not going to sit here and bore you putting in, you know, another 6 classes. Ultimately, when I get those additional 18 units, it says, hey, you're good. You don't need any more units to sit. Now, if you take additional accounting classes, you can start putting them in this column as you're chipping away at the licensure requirement. Of course, there's those additional business units at 14, and then you have to get the 10 ethics, okay? So, and when you look at that summary where we were before, Once you have accomplished that, that turns to a nice green up here saying, okay, you're done with that. Now start evaluating your business units, etc. Okay, so I have that up on the learning management system for you there, e-learning and Canvas, and you can go ahead and fill that out. And if you want to come by in the office hour, I can take a look at that to see that you're putting things in the right column and help you figure out whether or not you are eligible to sit for the exam and you're heading in the right direction for the license, etc. Okay. Now, one more thing, and then we're going to adjourn our discussion. I want to show you another thing, and I don't know why my computer just loves to close files on me when I don't want them to, because I know I had that open before. So let me close that. Let me close that. Yeah, it's not going to come back. So let me find it this way. Very annoying, but that's all right. Stay calm, John. Okay, don't let it bother you. I know I opened that before class, but for some reason, I guess when I flipped it into tablet mode, it decided, out of tablet mode into laptop mode, it decided to close that. Okay, let me go ahead and open this. Okay, and the reason I'm putting this up is, for example, you're at a community college and you can't get the bachelor's degree, okay, from the community college. Well, under the program that I run at Golden Gate University, what you would be able to do is bring 93 transfer units. Okay, you can bring 93 transfer units to Golden Gate University. That's better than the state universities, like I think San Jose State and San Francisco State. The most units you can bring over is 70. At Golden Gate, you can bring over 93 units. Okay, and then you would have to get 30 more units to complete for your bachelor's. And the program that I've helped develop here is you are able to get 12 units that are aligned with the 4 parts of the CPA exam. So we have a financial accounting reporting, tax regulation, business environment and concepts, which again is going away after 2023 or starting in 2024, and then the auditing exam, which is very similar to what we're going to be studying here. Okay, so what happens is you have the Becker material. We use the Becker material to teach the class. There's a $1,400 charge for the Becker material, so you get those materials. It's $545 per unit. You use those 12 units to complete your bachelor's, because remember, you'd still need 30 units to complete your bachelor's. You transfer 93, you need 30 units to get up to the 123. That'll get you the 120, plus those that you need to sit for the exam. And those classes are specifically tailored towards getting you to pass the CPA exam. And then you're able to take those same 12 units and apply them towards your master's. So the master's degree is another 30 units towards your master's. You don't have to do that for license, but let's say you're sitting there and you're saying, well, I want to get a master's degree. If you're getting 30 units, if it requires 30 units for the master's, you get 12 that you use to complete your bachelor's, and you can take those same units and apply them toward your master's. Now you're only 18 units away from your master's. And even if you don't decide you're going to do it right away, those are banked at some point in time you decide you want to shoot for your master's degree. Okay, so I'm making you aware of that program that's out there that helps you complete the process. But of course, you could go to, one of the state schools, San Jose, San Francisco State, whatever. They don't have this kind of a program. They don't have classes that line up with the CPA exam. They don't let you apply those to the master's, but of course you could complete your bachelor's by transferring to one of those schools. And again, I think they let you transfer something like 70 units as opposed to 93 at Golden Gate. Okay, I think that is the main thrust of what I wanted to go over with you tonight. I appreciate your patience. I'll be getting these lectures up week to week. Right now, the most important thing is to start to take a look at the textbook information. Make sure you're comfortable with some of the material from chapter 1. To be honest with you, our midterms are going to focus more on that first midterm, which is, I think, chapters 1 through 6, is going to focus more. As you can see, chapter 1 was very general. So really, we're going to hit the ground running this next week as we head forward with the chapter 2, 3 material. Okay, guys. hopefully this was helpful, and we will talk to you soon, okay?